All right, welcome back, folks. Wednesday, man, we're already halfway through the week here, or at least we're getting to halfway through the week, right? Welcome back to the trading room once again. Man, we had a nice day yesterday. We had a very successful day yesterday. We will of course go through all of those trades with you this morning. Just a couple quick housekeeping items, couple notes that I want to make as we get started today. I'm going to bounce over here. Let's go to our Discord channel for just a second. And I just want to talk a little bit. We do have this daily market news channel that we're starting to use now, where I put some data in every morning for you guys. And one of them obviously is just the technical indicators that we look at. Still bullish in pretty much everything that we're seeing, although we're seeing a few cracks, here and there in the marketplace. But obviously the trend is still up. But one of the things that I saw yesterday, I thought that yesterday's market action was very interesting. And it was from the standpoint of market internals. So as you know, the market has just been, I mean, we can look, let's bounce over here for just a second to the S&P, up almost 8 points here this morning. And it's not too hard, right? It's not too hard to figure out what the trend here is. And what the trend has been for a very long time. But yesterday was an interesting day, and there's the candle from yesterday, basically flat on the day yesterday is what we had, and we've had a few down days here and there, but they were usually catalyst driven. Biden coming out with his tax plan or something like that drives the marketplace. I think that yesterday was an interesting day because if you look at the total market internals, it was a flat day yesterday, and we didn't really have any negative news. So in other words, lately, the only down days we've had is when there is some type of a negative bearish catalyst in the marketplace. And yesterday, for the first time, market finished flat on the day, but you can see overall we had actually a little bit more decliners than advancers, and even more so in the NASDAQ. The NASDAQ was a little bit more bearish as well. It's the first time that we've kind of seen this type of internal action here in the marketplace for a while. And so I don't know what that means going forward here, other than maybe the market is getting a little tired here again. We're up 7 more points today on the open here. So we'll see how it goes for today, but we do have a busy day today. Bounce back over here for just a second to our order page, and let's talk about some of the things that we're working on today. So just a couple quick notes on today's trading. Full on earnings season right now. Again, we are full into the earnings season. A lot of tech names reporting, and because of that, we might have a little bit of activity today. And then, of course, we got Fed minutes coming out at noon, my time, Mountain Time, 2 hours before the market close. And so, once again, guys, as we look at doing a 0 DTE expiration SPX trade today, we pull it up and we see this very tiny expected trading range. And so we are going to use the same approach, the same tactic that we've been using pretty successfully on and off for the last couple of weeks, which is we're going to wait until the Fed minutes come out today. So that'll be about 2 hours before the market close. So we'll wait again today. We'll be patient on our 0 DTE, but it doesn't mean that we're not going to be very active today. So we do have a 0 DTE to go through to put on today. And again, the plan of attack is that we'll do that with about 2 hours left in the trading day. That's been really successful for us over the last several weeks, waiting a little bit longer. Of course, we give up a little theta, but not too much, and it's worked out well for us. Let's go through our open positions right now for the day. and talk about them, because we do have a couple of actionable positions that we're going to be looking at today, and maybe a couple more that we're even going to add. So let's go ahead. I'll go through them here, not necessarily in the order that is shown on the screen, but just the order that I've got them written down on. Our plug trade still has 9 days left to go in that, and maintaining above that $28 level. I do believe, and you can make a note of this, that we will be putting a call leg in on the plug today. So we'll be doing a call leg back on the plug trade again, bring in a little bit extra income on that. Let me turn over here to the chat line. Okay. So we'll be working on the plug trade here today. The hedges. So a couple things on the hedges. Number one, very, very happy. I was able to get some, I think, some substantive and good conversations with some of you over the last couple of days on how you were deploying your hedges, and maybe some alterations and some adjustments that we could make to those that I think improved your cash flow quite a bit. And so I'm happy with that. I'm going to reiterate that again today. If you are still not quite getting the cash flow that you want or need out of your hedges, touch base with me, DM me, and let's go through them and chat about it a little bit. Remember that you're not alone in this process, right? And we're here to help you. So anyway, the hedge is still working pretty well for me here, as is the case always on a day like today, where I've got a position expiring. These, my long, I've got my long ES and my short MES position here. Nothing really needed to be done on my short MES position. I'm covered on that at 41.20. Still have about, I brought in $700 of income on that trade. Still have about 300, which makes sense. We're about halfway through the week, right? Still about $300 of income potential there on that. And then about 187 in, or 162, whatever it happens to be at the moment here, of extrinsic value still left on the long ES position. And so that's the one that I'm going to need to figure out today. Again, it'll be closer to the close, closer to the market close today. If I want to roll that or just let that get called away. Right now, at least, probably looks like I'll roll that again and, see if I can bring in another maybe $600 or $700. Remember, my goal with my hedging position here is to bring in about $200 to $400 a day. And I've been able to do just a little bit better than that here so far this week. So we'll see how today ends up, obviously. But the hedges continue to do their job. And that might give me the opportunity here. Again, remember that my comfort level with position sizing was about 25 short contracts on the MES. So I'm about 5 away. I have enough money, or should have enough money, coming in this week in cash flow off of these and income off of these, that I could add 2 more without any money out of my pocket. And so that would be nice. Again, remember the key with the hedges is to be in a position that you can continue to adjust your cost basis. And the way that you can be in a position to continually adjust your cost basis is have cash flow, have money coming in, right? So that you don't have to come up with the money to add to your position. So hedges are kind of doing fine. Our ZW trade, I think we might be there, guys. I think we might be there where we have found sort of, I don't know if you want to call it a blow off top, but it definitely looks like we are in a position. And so I'm going to add that to our list here today as well. Our ZW trade, probably going to now add the next leg into that position. So we've got the plug trade that we'll be working on today. We've got the ZW trade that we will be adding to today as well. Just an FYI on the GME trade. The GME trade continues to work. Yesterday, it was a little damaging, but overall, again, we're up about $17,000 on the GME trade over the last 5 weeks. Just see what I've got left in the trade here for the rest of this week. There's about $150 of extrinsic value there, about $1,100 there. So, maybe $1,200 of extrinsic value there. Got the call leg as well. That's got $50 or so in it. So almost $1,200, somewhere in that $1,300 range of extrinsic value that I've still got left in this, with a couple days left in the trading week. So I don't think that I need to make any adjustments on the GME trade right now. I think it's working as it should. So GME is plugging along. You never know what you're going to get with GME though, right? Our bracket order on SH is still kind of doing its thing. No real action there. Again, I like the bracket orders. We use those every day in our AST trading system, and that really is a nice way to manage risk. Our copper trade is plugging along. And again, remember on our copper trade, this was a very, let's look at my capital requirements here on the copper trade. Very small trade, right? $442 trade. So very small trade on copper, but I think you're going to see that it at least has the potential to have one of our best potential ROIs out there. And so continue to like that. That's continuing to work for us. No real action needed on copper. We've got our one of my favorite trades that I do over and over again is the EWZ trade. That is just the credit strangle. Very straightforward sort of credit strangle. And again, we just need to let the clock kind of tick away on this for just a little bit here, for just a little bit more time. So EWZ is clicking along fine. Now, here's what's interesting. So we have our SPY trade going on, right? Our weekly, what is traditionally our 4-day to expiration trade. It's working out quite nicely so far this week. We put the full iron condor on Monday of this week. And generally speaking, we have the potential of about a 10% ROI per week, 40% a month on this as we set them up initially. Now, we've been very fortunate in the last few weeks to be able to position these by sort of legging into them and still get that ROI. We went all in on Monday with this with a full iron condor, but if you remember and if you look at it, kind of an interesting setup with this in that we were a little tighter. Let me just open that up a little bit. We were a little tighter on the spread on the put side, and that gave us a little bit of a safety net, if you will, on the downside of this trade, but it also created an opportunity for us this week to be able to add to this trade. So we have a little bit more flexibility in the SPY trade than we normally would have. And so, for example, if we came in here and looked at our current legs, I'm just going to grab this right here. And again, this is not, we're not doing this right now, but we could look at maybe even right here, for example. Let me just grab this. And you can see right here what this is going to do to our buying power effect, okay? So I could ramp, and that pushes my buying power up. I could ramp again, pushes my buying power up, ramp again. So you can see, and we can look at this in the curve as I'm doing this, what this is doing to our risk graph. But I can continue to bump this, and I'll just keep bumping this until our buying power stops being a credit. And there you go. So really, it would probably be about 7 contracts for me, would be that break-even point. And you can see that's going to bring in about $80 in additional income. Okay. Now, $80, what does that mean? well, it takes us to about over $300, right, of credit. So it would be better than a 10% implied rate of return on that trade. And it also would balance out the risk a little bit more. So making a note on that, probably going to add to our SPY trade today as well. Okay. So probably be adding to our SPY trade. We had a earnings trade that on Tesla. We had an earnings trade on Tesla that we put on Tuesday, yesterday, Wednesday, Monday. I can't remember when we put on the Tesla trade. I think it was Monday. Yeah, thank you, Guybrush. It was on Monday. Thanks, guys. And that's probably ready to be taken off today. There's only $19 of extrinsic value still left in that trade. So I'm probably going to be closing out the Tesla trade today and booking our profit on that. That just makes sense to do. So we'll probably book that. We had a earnings trade. Well, it wasn't an earnings trade. It was just a bonus trade, right? We had the bonus trade on MVIS. So let me just look at that. Let's look at that quickly here in the risk graph. That was a trade that we put on as a bonus trade yesterday, moved into the profit zone very, very quickly. Now it's bouncing back up again today. It's up by about $3. And so that gave some of you guys the opportunity to get back into this trade this morning if you weren't able to catch the price that we used on Tuesday. But that still looks really, really solid right now. So no action right now on the MVIS trade, even though it is in the profit zone. We're just going to sit there and hold it for a little bit. We may have an opportunity in the next 7 to maybe 10 days to add a put leg into the MVIS trade and really enhance the potential rate of return on that. This was about an 8-9% potential rate of return trade. Pretty darn good probability of profit, almost an 80% trade. So no action really needed there. And then I think last but not least was our trade that we put on yesterday. And this was Yum. So for some of you that have worked with me before and were part of the Paradigm program, you're very, very familiar with these kinds of trades. We called the program at Paradigm, we called it the crash speculator. We're calling it just the bearish trades here, the bear market trades, excuse me. But it's again, kind of just clicking along just like clockwork here. You can see that we're just now starting to move into the profit zone here. But it was a very, very juicy trade, put up about $1,400 to bring in about almost $300 of gross income on the trade, with a little bit of a kicker here that could potentially make us even more money if it falls down below 107.5, 107.50, okay? So these are pretty powerful trades. You see the track record that we went through in the YouTube video that I think I posted yesterday. And, you know, it's interesting. There are trades that can make you more money. And there are trading strategies that can be almost as consistent, if not more consistent than this. But there are very few strategies that I've seen that have the best of both worlds, that have just sky high potential rates of return. I think that, and again, you guys can correct me if I'm wrong, but we went through the audited results of those. I think the 3-year average annualized return in that program of following these strategies was well over 115% a year. So really, really high potential rates of return with some incredible consistency. So that trade continues to work here as well. There's no real action needed there. So I think that covers, guys. I think that covers everything that we've got going. So we'll probably add to the plug call leg today. We'll probably add to our wheat trade. We'll probably enhance our SPY 4-day expiration trade, going to probably close out the Tesla trade, book the profit there. And of course, we'll have our 0 data expiration with about 2 hours left to go in the marketplace. So a lot of stuff to go through today and do, but that gives us sort of a rundown of the day. So I'm going to start working right now on the trades that we have talked about. I'm going to start working on looking to add to the plug trade, the wheat trade, the SPY trade, the Tesla trade. I'll get those all booked here and I'll get them into the trade channel. And then we will just work our way through the day until the Fed and see where we're at. So that's our open, guys. Again, I'll start putting these trades into the trade channel here in just a second, and then I'll be back with you. Thanks, guys.